let me try to solve this illustration. It's one of the comprehensive illustrations related to the debtors, bad debt, discount on debtors, and provisions on that. In the trial balance, debtors is given as 10,000 rupees in the debit side and bad debt, discount on debtors also available. In credit side, we have been given the provision for doubtful debts and provision for discount on debtors. So these are the things are available. And apart from that, in adjustments also, we have been given bad debt, provision for doubtful debts, discount on debtors, usually not given in the adjustments, but may be possible that may come in the adjustments also. So here I have given this in the adjustment. Provision for discount on debtors. So what is the requirement here? What are the requirements we have to fulfill here? Pass journal entry, prepare ledger for bad debt, provision for doubtful debts, discount on debtors and provision for discount on debtors, and as well as how this will appear in the balance sheet and P&L as an extract. So these are the things that are going to be completed in this illustration. Now, whenever the bad debt and the discount on debtors appearing in the trial balance, what does it mean? With regards to these two, the adjustment entry is over. So you no need to pass the adjustment entry for these two. But of course, we have to pass the transfer entry. We have to pass the transfer entry. And whenever we have been given the provisions, the credit side of the trial balance, in general, it is called as opening provision. Opening provision. Whatever the things available in the adjustment, where bad debt and provision, discount on debtors, these two are again, we have to adjust with the debtor. So this will be first passed as an adjustment entry and then transfer entry. And then the PDD as well as provision for discount on debtors given in number 2 and 3, number 2 and 4 is meant for the next year's requirement. Okay, next year's requirement. Is that clear? Before I proceed this, let me give the format here. How this will appear in the balance sheet, how this will appear in the P&L account. Let me start with a small working note here. The working note starts this way: debtors. The value being 10,000. Whatever the things are there in the adjustments should be now subtracted from there. So bad debt and discount on debtors. These two should be first of all subtracted. Discount on debtors. The value for bad debt and discount on debtors being 200 and 100. 200 and 100. Now let me pass the adjustments entry here. Adjustment entry. Okay. Adjustment entries. So I have to pass the adjustment entries for what? Bad debt and discount on debtors, right? What is journal entry for that? Bad debt account debit. Bad debt account debit. Yeah. To debtors account, the value being 200, and of course we have to pass the entry for adjusting the discount on debtors. The entry will be the similar one. Rather than the bad debt, I am going to debit discount on debtors. Okay, this discount on debtors being 100 to debtor. By passing these two journal entries, what happens? The debtors balance will be decreased, right? That's why I am subtracting these two. After subtracting, whatever the balance left over is nothing but the amount we expect may be realizable in the coming days. Okay, after a bad debt, and even the good debtors will ask for the discount, so we won't get that 100 rupees. So out of 10,000 rupees, 200 rupees bad debt, definitely will not get it. And we thought 9,700, 800 could have been receivable, where one of the debtors claimed some discount. Okay, we offered another 100 rupees. So we expect 9,700 could have been realizable. And we still have some doubt. There may be possible of some bad debt as well as discount also for the remaining amount to be collected. So whatever the expected loss in the future, we make a provision for that. That provision comes under provision for doubtful debts as well as provision for discount on debtors. These two will be calculated from here. So minus provision for doubtful debt. Provision for doubtful debts, PDD in short. Okay, DD, which is 5%. On this you have to claim 5%. So the value being how much is that? 400 and 9,700 into 5%. 485. After subtracting that, the balance being 9,215. 9,215 minus provision for discount on debtors. This value being 2% on this. So we have to calculate 2% on this. The value being 184. Am I right? Subtract that 184. Finally, you will be getting 9,031. 9,031. This will appear in the balance sheet. This block will appear in the balance sheet. This block will appear in the balance sheet's asset side. Now, I pass the entry for, see here I have passed the entry for the bad debt. Okay. Next one being the transfer entry. I'll just keep this discount on debtors will be passed later, not to confuse you. Finish up the bad debt alone separately, bad debt provision for doubtful debts. Bad debt account debit to debtors 200, it's over. Then the entry being what? We have to adjust the bad debt. Okay, we have to adjust that. So you keep it in your mind simply. I'm going to deal with the bad debt. This bad debt is going to be adjusted in the which account? PDD account. If the PDD is not sufficient, we can adjust that in the P&L account. So how much PDD we have in the beginning? We have 200 rupees in the beginning. The journal entry being PDD account debit. PDD account. When we use the PDD, it is going to be debited. When we create, that PDD account should be credited, right? So I am now using how much we have in PDD? 200 rupees. 200 rupees. What is the bad debt we have currently? To bad debt. How much bad debt we have? No, it's not 200. 200 plus existing 300 is also there. That should also be transferable. Both put together, it is around 500 rupees is the bad debt to be adjusted. And we are in shortage of how much? 300 rupees. Whenever we are having some shortage, that shortage will be adjusted in P&L account. So I am going to debit the P&L account here. So P&L account debit to bad debt. The value being 300. The value being 300. Not only that, in the coming year, we need to have some provisions. For that also, we have to create the provision, right? So provision required for the next year being 485. This 485 can be created by debiting to the P&L account. So profit and loss account debit to PDD account. To PDD account. When we have the PDD in the credit side, it means it's only a creation. It's only creation. This value being 485. It is better you can club these two entry and pass this as a single entry. You can club these two and pass as, combine these two and pass this, that as a single entry. If you do that as a combining entry, PDD may be eliminated. So simply it may be summation of that. So I will handle it later. With that, PDD case is over. Now we have created the discount. For the discount given in the adjustments, we have to pass the adjustment entry. While passing the adjustment entry for the discount and debtors, debtors debit to debtors is over. Now this discount and debtors should be adjusted. Where to adjust the first? Should be adjusted in the provision for discount and debtors available in the credit side of the trial balance. If the provision is not sufficient enough, we can use the other account also. Now let's see here. Provision for discount on debtors. How much we have provision in the beginning? We have 500 rupees in the beginning, right? So we have 500 rupees in the beginning. Two discount on debtors. How much is the discount on debtors here? 100 rupees in the adjustment. Already we have 200 rupees existing in the P&L account. This is trial balance. If you club these two, 300 rupees will be adjusted. Okay. Now there is a surplus. That surplus can be transferable to where? To P&L account. This value being 200 rupees. And we need to create the provisions for the next year, right? How much provision required for the next year? 184. Whenever we create the provision, it should be credited, means credited. When we use, then it should be debited. So here on use, the provision is debited. Now for the next year, I have to create 184. That may be possible by debiting the P&L account. So P&L account debit to provision for discount on debtors. This value being 184. This value being 184. We of course combine these two journal entries also. We can combine comfortably. If I combine, what happens? This entry being, on combining this entry being PDD in the debit side and PDD in the credit side. As we have the PDD in the credit side excess, so 2 PDD will be there. 2 PDD, provision for doubtful debts. 200 rupees debit side and 485 in the credit side. Ultimately, the PDD should be 285 rupees. 285. And profit and loss account in the debit side 300 and 485 in the debit sides. In total, 785 should be in the debit side. So profit and loss account. Profit and loss account debit 785. 785. Apart from that, so we have completed the P&L account. So bad debt is there. The bad debt should be in the credit side. So to bad debt. To bad debt. Okay, the value being find it. Now verify whether it's matching or not. So debit is matching the credit. Same way for the provisions also we can combine these two. If I combine, what could be the journal entry here? Provision for discount on debtors debit, provision for discount on debtors credit. Okay, if you are clubbing that, you have the ultimate balance only in the debit side. So provision for discount on debtors. Okay, provision for discount on debtors. This value being find. Discount on debtors 300 rupees in the credit side. No offset is possible. So to discount on debtors, the value being 300. And in P&L account, credit side 200 and debit side 184. Okay. Isn't it? Provision is, yeah, net of that. How much is that? Come on. 316. Now if you net off that, then the difference being, yeah, P&L account difference 16 rupees to P&L account 16 rupees. Is that okay? This is the logic you have to understand. Now we have passed the journal entries. We have to understand the preparation of the bad debt, provision for doubtful debts, discount on debtors, provision for discount on debtors all. Now, so I will prepare that separately here. Right, let's see here. So what are the accounts are going to be prepared here? Bad debt account, then provision for doubtful debts account, discount on debtors account, and provision for discount on debtors account. What are the items already exist in the balance sheet, in the trial balance? We have to post that first of all. For the better understanding, I'll just keep it here. Let's see here. I have taken the trial balance and adjustment entries. We already found out that, right? Trial balance is here. Adjustment entries passed. From the trial balance data, I am going to incorporate all these adjustment entries to find out the closing data. it is better to open the debtors account also. So I will open the debtors account here. Debtors account. Now this debtors having the debit balance will appear in the debit side. Balance brought down. Balance brought down. The value being 10,000. This bad debt already available in the debit side, so balance 300 rupees. Discount on debtors 200 rupees already available here, so balance 200 rupees. And PDD balance in the beginning, credit side 200 rupees. Provision for discount on debtors, sorry, provision for doubtful debts. Balance in the beginning 200 rupees. Provision for discount on debtors, opening balance should be in the credit side, the value being 200. 500 rupees. 500 rupees. Very good. What are the balances available? Trial balance. I just opened that account and posted the either debit or credit sides without any trouble. Right. Apart from that, I have to incorporate the adjustment entries. Bad debt account. In bad debt account, two debtors. The value being 200. In debtors, by bad debt. Am I right? So you don't have any confusions, only a posting 200 rupees. Discount on debtors, so we have to open the discount on debtors to debtor here. Two debtors 100. In debtor, by discount on debtors. By discount on debtors. The value being 100. And PDD account, two bad debt. In PDD, two bad debt, 200 rupees. In PDD, its value should be posted, the opposite term should be used. Don't get confused. The opposite number should not be taken. And in P&L account, we can open the P&L account also. Okay, we can open the P&L account also. Let's see. Now, I'll remove this. I will open the P&L account here. P&L account and balance sheet extract. Profit and loss account as well as balance sheet. We will not prepare completely. Only to the extent needed we are going to prepare. In P&L account, two bad debt. In P&L account, two bad debt. The value being 300. In bad debt, by PDD, okay, by PDD, the value being 200 rupees. P&L account 300 rupees. Okay. In bad debt, we have two items. The opposite means you have to write all the two items. And this one, P&L account, 2 PDD. 2 PDD. Okay. 2 PDD. This value being 485. Okay. In PDD, by P&L account, 485. And here, provision for discount on debtors, we have to post two discount on debtors. Value 300. Profit and loss account 200 rupees. Profit and loss account 200 rupees. Discount on debtors. In discount on debtors, by provision for discount on debtors. By provision for discount on debtors. The value being 300. In P&L account, by provision for discount on debtors. Provision for discount on debtors. Isn't it? Provision for discount on debtors. 200 rupees, the value being 200. Its own value should be posted. Okay. Similar in discount and debtors, 300, correct. Then in P&L account, two provision for discount and debtors. Provision for discount and debtors 184. Right. And here provision for discount and debtors, in provision for discount account by P&L account 184. Okay. By P&L account 184. Is that okay? By passing the entry, we can transfer to the concerned ledger, and from the ledger we prepare the balance sheet as well as balance sheet, means P&L account as well as balance sheet extract. Now, if I tally the bad debt, it's a nominal account, right? This will disappear hereafter, it will not appear anywhere. This will not appear anywhere. And PDD account, if I tally this, 685, we end up with 485 as a balance carried out. Discount and debtors is a nominal account, so will not have any balance, got eliminated. Provision for discount and debtors 684, 184 is the closing balance carried out. And if I tally the debtors, this balance being 9,700 balance carried out. Now, the ultimate value being 785 debited in the P&L account. The ultimate value of this being 16 should be in the credit side, right? Now, what are the leftover items are there? Debtors. The value being 9,700, and provision for discount and debtors, doubtful debts, as well as provision for discount and debtors. These two balances we have in the credit side. Either it may be posted in the liability side, or it can be subtracted from the PDD, putting that in the inner column. 485. So 9,215 minus provision for discount 184. Then what is the ultimate value? 9,031. Is that okay? The behind the scene is this one. Don't study all the things blindly. Anyway, let me explain here. Okay. Hope this you may be clear with this. Whatever the transactions may be related to the bad debt as well as provision for doubtful debts, you can pass the entries. And after passing the entry, if you prepare the P&L account and balance sheet, you will be getting the exact one. But by skipping the steps here, you can work out this straight away in the balance sheet and P&L account. How do I work out that straight away in the P&L account as well as balance sheet without passing these kinds of entries? Right. In balance sheet, okay. In balance sheet, what we do is very simple. This block will come in the balance sheet. This block will come in the balance sheet. So, debtors 9,700 minus PDD 485, 9,215 minus provision for discount 184, outer column 9,031. See, we are skipping so many journal entries to directly post that in the balance sheet. So it's your duty to understand the behind the logics as you are being the professional student. Of course, you might have studied this way also. Pretty simple to get the answer. Okay. Verify this. The balance sheet value what we have arrived here also same 9031. With so much of journal entry and passing into the ledger, we prepared this, and or we can straight away get this way. Straight away get this way. Now the next question is how this will appear in the P&L account, sir. While posting in the P&L account, let's see here. In the profit and loss account. In the profit and loss account. This is the process you have to follow. Bad debt given in the trial balance to be adjusted now. Given in the trial balance to be adjusted now. Bad debt given in the adjustment should also be created now by charging to the P&L account. Provision for doubtful debts. Provision for doubtful debts to be created for the next year's requirement given usually lies. From there, certainly, provision for doubtful debts already available, which is nothing but the opening of given in the trial balance. Ultimate value is nothing but transferring this balance to the either debit side or credit side. If the value is positive, put that value in the debit side. If the value is negative, put the value in the credit side. So the bad debt given in the trial balance being 300, bad debt given in the adjustment is 200. Provision for doubtful debts in the adjustment being 485. So the overall value being how much? 985. Provision for doubtful debts already available in the trial balance being 200. So the ultimate value transferable there is 785. If you keep these 4 lines in your mind, of course you can solve the comprehensive illustration. There is no any problem in that. But how do I get that 785 in the accounting way? So we have passed so many adjustment entries, and by posting that we can get the answer comfortably here. Right. So the amount we debited with respect to the debtors and bad debt and provision for doubtful debt is 785. We got the same answer, but it's a working note like we can get it easily. Working note like we can get it easily. Repeat the same process for what? Discount on debtors also. So discount on debtors given in the trial balance. Given in the trial balance. The value being 200. Okay. The value being 200. Discount on debtors. Then discount on debtors given in the adjustments to be added. Provision for discount on debtors in the adjustments will also be added. Minus provision for discount given in the trial balance to be subtracted. Discount on debtors given in the adjustment is how much? 100. Provision for discount on adjustment 185. So the total value 184. Okay, 184. The total value being 484. What is the balance already we have? 500. As the value is in negative, you have to transfer that to opposite sign. Okay. This is the logic behind. Hope you could now understand the comprehensive illustration. Come on, make a note of it.